What's up, traders? In today's video, I will be performing a market forecast on Nasdaq as well as the DXY using smart money concepts. So stay tuned. Now, if you haven't already, as always, I highly suggest that you check out our most recent market forecast video here on Nasdaq, uploaded on the 23rd of October, just to catch you up to speed with what we've been looking at on the pair, so that this video makes just a little bit more sense for you in terms of what we're looking at going into the next couple of weeks and the remainder of this year. Now, before we dive into our market forecast on Nasdaq, I just quickly want us to have a look at the dollar index, or the DXY. A couple of you on Instagram and on YouTube have been asking me to perform just a little bit of analysis here on the DXY, as you guys feel it will be beneficial to you guys in the execution of your trades. Now, if you're not aware, the DXY can be a little bit of a cheat code in helping you find just a bit more correlation in the overall trade ideas that you may develop. Now, what exactly do I mean by this? Let me give you guys a very quick, simplified explanation. We all know that currency pairs consist of two currencies, right? For example, the Great British Pound and the US dollar, right? Now, as you guys know, as you may or may not know, the first currency in a currency pair is what's referred to as your base currency. And then the second currency in your currency pair is what's referred to as your quote currency, all right? So in currency pairs where the US dollar is your quote currency, those currency pairs will essentially have an inverse correlation to the DXY. So what do I mean by an inverse correlation? Essentially, whenever the DXY is trending upwards, these currency pairs where the US dollar is the quote currency or the second currency, these currency pairs will tend to trend downwards, right? And then the opposite is true for currency pairs where USD is the base currency. So for example, USD JPY, you can see that USD is the first currency in that currency pair, so it is the base currency. These currency pairs move in the same direction essentially as the DXY. So whenever the DXY is trending upwards, these currency pairs will also trend upwards, all right? And this is why traders like to look at the DXY, because it can add maybe just an extra level of confluence or an extra layer of confluence to the analysis that they perform on the currency pairs that they actually trade, all right? Now, the way I use the DXY, I only mainly look at the daily chart, because it's all about just adding a little bit of confluence to the analysis that I perform, right? I don't look at it frequently. I look at it every once in a while. So if we just very quickly look at it here from a weekly point of view, we can see that the DXY interacted with and actually blew through a very significant level, 109.770, before pulling all the way back again, right? There is a possibility that we could see the DXY pushed up towards 125.10, but who knows what the future holds, right? Now, we can all agree that up until this point, the DXY has been trading bullish. How do we know that it's been trading bullish? Well, it's been putting in higher highs, and it has also been putting in higher lows up until this particular point in here. Now, after the DXY put in this high, the expectation was for it to pull back, right? Create a new higher low, which it did do. And then this higher low was supposed to create a new high. But you can see that this low failed to create a new high. So as soon as this low failed to create a new high, it became weak. And as you can see, price action ended up taking out this low. And essentially what happened here is we essentially had a trend change. When price action violated this low, which failed to create, we essentially had a trend change. So once price action broke to the downside in here, we essentially saw the DXY change from a trending bullish market to now a bearish market in here. All right. We then created this new lower low. We then created a new lower high. We had another bearish break of structure in here. And essentially now, what this secondary bearish break of structure has done is it is now confirmed that yes, the DXY has indeed changed from a bullish state to a bearish state. And we can now anticipate, right? We can now anticipate some bearishness to continue, right? So a couple of things that I want to draw your attention to in here. Because this lower high has created a new lower low, we can mark this out as our strong or protected high. I'll say that again. Because this new lower high created a new lower low, we can mark it out as a strong high or a protected high, and then we can go ahead and mark this low out as a weak low. The reason we mark this out as a potential weak low is because the anticipation is that this weak low will fail to create a new high, and once this weak low fails to create that new high, we can then see price action come back to take it at some point in time. All right. So once we mark out our strong high and our weak low, we then go ahead and we can mark it out. And if you want to apply SMC concepts to the DXY just to understand the overall direction of it, absolutely you can. We can go ahead and we can mark our premium and discount on this particular bearish leg in here. So once we have our premium and our discount marked out, we can go ahead and we can mark out a couple of areas of interest that we want to see price action interact with. The first would obviously be this extreme daily supply zone all the way up here. And then the second one would be this daily supply zone that sits just above the equilibrium in here. All right. So what are we anticipating price action to do here now on the DXY, now that we have an established daily bearish leg in here? Well, the anticipation is that we can see some bullish pullbacks to at least this particular daily supply zone before potentially this underlying bearish trend continues. Now, one thing that in a sense supports this belief that we could be seeing some bullishness on the DXY in the coming days is the fact that price action is actually interacting with this particular daily demand zone in here. As you can see, if we draw this on, we can see that this bearish leg has come in to mitigate a daily demand zone that previously was not mitigated in here. All right. If you look at this particular price action in here, you'll see that we have our break of structure in there. All right. And then this break of structure to the upside would have obviously given us a valid bullish daily leg in there, right? As you can see. But in this instance, price action only pulled back towards the equilibrium of that particular bullish leg. It never came back to mitigate this extreme supply zone in discounted pricing. So whenever price action leaves behind areas of interest like this, these areas of interest tend to become reaction points in the future. So in this particular scenario, price action is now coming in. It has mitigated that demand zone, but this demand zone mitigation might only be a short-term bullish reaction before price action potentially continues down with the underlying bearish trend. So for the DXY, going into next week, going into the remainder of November, we can anticipate some bullishness in here. We can anticipate the DXY to be trending upwards, right? Now, the reason this is significant is because if we are anticipating a short-term bullish reaction here on the DXY, we can then anticipate also that all currency pairs where USD is the base currency or where USD is the second currency in that currency pair, we can anticipate that those currency pairs are going to be trading downwards, all right? Because the DXY is trading up, all right? On the opposite side of things, currency pairs where the US dollar is the base currency, we can anticipate those currency pairs to trade in the same direction as the DXY as well, right? So it's going to be very interesting to see how this plays out on the DXY going into the remainder of November and the start of December as well. Now, switching over to Nasdaq, we can obviously see the price action has given us a nice bullish reaction off of this major structure level around 1067.2. We can see that from a structural point of view, Nasdaq has been in a bearish trend. All right, we obviously had this weekly bearish break to the downside, which then gave us a new bearish weekly leg. The anticipation obviously was for us to trade back into potentially premium pricing of this weekly leg before continuing with the underlying trend. Now, in previous videos, we did say that there is potential for price to pull all the way down to this particular level at 6623.3, purely because of the fact that we now have this underlying bearish trend essentially that we have. And we did also say that the only time we would consider Nasdaq to be in a recovered bullish trending market is if these highs were to be taken. So at the moment, because we are in an underlying bearish trend, because these highs are still in place, we are still anticipating that Nasdaq could continue down lower, right? Dropping down to the daily chart now, and what you can see is we have our bearish break of structure to the downside in here. We have our bearish leg in here. And we also now successfully had our daily change of character that occurred. Now, as we've said before, in order for you to have a valid change of character, you only need to see wick violation. So if we zoom in here, you can see that price action just about wicked above this high, which then helped us identify this as a daily change of character. All right. This daily change of character helped us confirm this as our swing low on the weekly time frame, and we've now identified this swing low as our week low. All right, remember, we are in a bearish trend. The anticipation is that this low is going to fail to create a new high. As soon as it fails to create a new high, we can then anticipate it to be taken at some point in time. All right, so the daily change of character helped us confirm this as a new swing low. We are now obviously waiting for price action to pull into at least premium pricing before that bearish continuation occurs. Now, if you cast your mind back to the video that we uploaded 3 weeks ago, we said that we first wanted to wait for that daily change of character to occur. We knew that there was a possibility that price action could potentially interact with this 4-hour supply zone, all right, and give us a bearish reaction. Now, what ended up happening is we got the change of character, price action pulled down, all right, the low remained in place. We had a nice bullish push to the upside, which then gave us a mitigation of this 4-hour supply zone with a little bit of a bearish reaction from there. All right, so going into the remainder of November, there's a couple of things that we can look at now on Nasdaq from the daily chart. All right, we acknowledge the fact that price action has now interacted with this 4-hour supply zone. A couple of things can happen here. Because of the proximity to the equilibrium of this 4-hour supply zone, there is a possibility that price action could now continue with the underlying bearish trend, okay? Because of the fact that this 4-hour sits just about at our equilibrium of the weekly leg, right? However, what I am leaning towards more is I'm leaning more towards price action giving us a bearish reaction from this 4-hour supply, but then that would only be a short-term bearish reaction, possibly down to this daily demand zone in here. All right, if I mark out our internal daily structure for you guys here, remember, if we have our weekly leg in here, so this is my weekly swing high, this is my weekly swing low. Within that move, we obviously have internal daily structure, and that internal daily structure essentially looks something like this, where we have price action pushing down, creating lower lows and lower highs, obviously until it got to this point where we now had a break of structure to the upside here. Now, some pattern traders may identify this as a potential inverted head and shoulders pattern. By all means, you can mark it out as that. But from a daily point of view, essentially what we have is we have this bullish break of structure in here. All right. Why? Because price action is coming off of a change of character. It has then came in and created this new higher low essentially from this low, and it has now pushed up to create a new higher high. So for all intents and purposes, from a daily point of view, okay, from a daily point of view, we are now bullish. Okay, we can then go ahead, and without confusing you guys too much, we can then go ahead and mark out our premium and discount from a daily point of view in here, from this low to this high, generated by this break of structure to the upside in here. Once we do that, we can obviously also go ahead and mark out our, so this would now be a weak high, and then this would now be a strong low. So if we then just look at price action in isolation from an internal structure point of view, the anticipation would be we have just generated a new swing high. All right, we are now anticipating a pullback towards discounted pricing before this underlying trend can continue. All right, so this particular pullback is going to be potentially facilitated by this 4-hour supply zone. And then what we want to see is we want to see price action pull down towards this daily zone. We can look for our entry model in here, and then we can look for price action to continue higher. Now remember, if that were to happen, then we know, all right, that a bullish continuation from here would be in line with a weekly pullback from this bearish weekly leg in here. Yes. So if we find buying opportunities in here, we can then say that we are in line with that weekly time frame, and then our overall target would essentially then be this particular daily supply in here, because this supply would then be a high probability zone that sits within that sits within premium pricing of a weekly leg that we can then see potential bearish continuations from. So we could be looking at something like this. All right, now we know that this is a valid supply zone. Why? Because we have the bearish engulfing candle, we have the bearish break of structure to the downside, we have the imbalance left over that sits just below that zone, and one extra confluence that we can add here is we also have what looks like relative equal highs in here that has formed, which gives us the liquidity. All right, so for Nasdaq going into the remainder of November, what I would like to see is I would like to see this particular daily leg play out. Okay, I would like to see a bearish pullback potentially towards this demand zone before price action continues with that bullishness towards this daily supply zone that sits within premium pricing of the overall weekly bearish leg. And then if we do get a mitigation from here, we can then look towards potential bearish continuations from the overall picture. All right, understand that from here price action could very well just continue up. We won't always see a pullback towards our discounted pricing in this particular scenario. We could just see price action push up. If that happens, it's not a problem. It just means that you didn't get an opportunity from here to buy. But the analysis remains the same. We are anticipating price action to push higher. All right. Now, what happens? What happens if price action from this 4-hour mitigation shoots through our strong low and shoots through our weak low? Well, if that happens, then it means that the overall weekly trend, right, was a lot stronger than this daily bullish trend in here. And because we knew already that there was potential for price action to mitigate this 4-hour zone and then continue with the underlying trend, we're fine. It just means that we didn't get any opportunities to trade price action a little bit deeper into the overall premium pricing. All right, so that's what we're looking at on Nasdaq going into the remainder of November, going into the remainder of the year. That's what we're looking at on the DXY. If you guys enjoyed this video, please make sure that you leave it a like, subscribe to the channel so you don't miss out on any future content. I appreciate you guys so much for watching, and I'll see you in the next one.